Welcome to FinTech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. We're diving deep into the world of FinTech with none other than the one and only Tal Schwartz. He's not just any expert. He's a driving force behind Canada's largest FinTech publication.
Canada mirrors a lot of the same technology innovation. You're starting to also see totally online originators and servicers for this kind of come to Canada at a slightly slower pace. Canada often is viewed as another northern state. It's about 40 million person population. We speak multiple languages here. Different provinces are regulated. Many, good reasons why a bank wouldn't want to offer their sponsorship, and that's totally fine. Banking as a service really has been one of the most significant drivers of fintech innovation globally. In order for Canadian fintech to really catch up with other developed markets, we absolutely need to have way more sponsor banks that have different risk profiles in order to unlock the next wave of fintech innovation. There's a lot of discussion around AI that is just the rebranding of the modeling that these companies were already doing. I see it as a huge unlock for financial services within AI over the last few years.
Here's a quick message from the Accrued series sponsor. As default rates continue to rise and margins compress in lending, financial organizations are searching for solutions to combine that operational efficiency with innovation. Look no further, as LoanPro allows lenders to enhance their origination, servicing, collections, and payments using the foundation of a modern lending core. Check out LoanPro.io to learn more about how over 600 financial organizations have modernized their tech stack with LoanPro. Welcome to Accrued, the FinTech Confidential series presented by LoanPro. In this series, we're deconstructing the complexities of lending and exploring compliance, optimization, modernization, and personalization through the insightful conversations with the industry's best. I'm Ted Huff, and here with my co-host Colton Pond, we'll be guiding you through the intricate lending world, whether you're just intrigued by how the technology is reshaping lending. You're in the right place. Now let's dive into another episode of Accrued.
Thanks, Ted. It's good to see you as always. Really excited for this episode as we travel north up to Canada and learn more about fintech, financial services up in Canada and what's going on.
Well, Colton, today, as you mentioned, we're diving deep into the world of fintech with none other than the one and only Tal Schwartz. Now, he's a distinguished, yes, I said distinguished, Canadian fintech writer and advisor based out of Toronto, Ontario. Now, he's not just any expert. He's a driving force behind Canada's largest fintech publication, and is a must-read for anyone that wants to stay ahead of the fast-paced world of fintech in Canada. Now, let's talk a little bit about Tal's role in the publication, his extensive background in policy and research. As a former head of policy and research for the Canadian Lenders Association, he helped shape the landscape of financial services in Canada. His experience doesn't stop there, though. Tal also has a solid footing in product management, having spent time as a senior product manager at Nomis. But what really sets Tal apart is his contributions outside of the office. He's the chairman of Mount Sinai's Hospital Under 40 board and sits on the board of Access Community Capital Fund, where they provide low-interest loans to Canadian immigrants, a testament to his commitment to making a real difference in people's lives. Today, Tal will not only share with us his depth of knowledge in Canadian fintech, but also his unique perspectives on how this sector is evolving, the challenges it faces, or the breakthroughs that have kept it exciting. You'll find Tal's insights very valuable. And speaking of invaluable insights, let me hand it over to Colton and a little bit about how Tal's work has touched the lives of him and other people.
Bryce Nobles is our head of growth marketing here at LoanPro. He kept mentioning, hey, Tal really knows Canadian fintech and what's going on up there. So Tal, I'm excited for the insights. I've talked to financial institutions in Canada for a long time, And the first question they always ask as a fintech is, who else do you work with in Canada? Because things are different in Canada. So I'm excited to dig into what actually is different. Welcome on today.
When I first launched Fintech Confidential, I started getting asked, are you a Canadian Fintech show? And the main reason is like, I think the first 5 or like 50% of the first 10 episodes were all Canadian Fintechs. So I thought it was really great when Colton brought onto the agenda to be talking to. And I just want to go ahead and kick it off because as we're talking about Canada, a lot of people think of Canada a northern version of the US. It's not really that way. So I would love for you to share with us your perspective on the current state of Canadian fintech and how it is playing in the global economic trends.
Sure. And thanks for having me, guys. So I agree with you. I think Canada often is viewed as another northern state. And to some extent, there's good reason to believe that, we share a language, both developed economies, the US, but even within Canada, it is definitely not a homogenous market. And it's a small one too. It's about 40 million person population. We speak multiple languages here. Different provinces are regulated differently. You have different financial infrastructure in different provinces. Internationally, a lot of companies come to Canada as almost like a soft landing before they go into the States. And I often try to advise against that because a lot of the regional differences that you have just within Canada make it super difficult to launch products here.
You mentioned the language differences. I mean, I've done a lot of work in Quebec and French having to be primary, English being secondary. I remember being in a number of audits around, do you have enough French in it? Oh, this has to be French. And then we pull back the curtains a little bit further. It's like, well, based upon the way that you are receiving that function or that service, okay, French doesn't have to be required first, but it has to be available. And it was, I'm using that as one of the examples that is probably one of the more complicated ones, looking at that complexity between all those different pieces. How are you seeing that impact the way that Canada plays in the global economy?
Quebec is a perfect example. You have tons of Canadian fintechs that operate within Canada, except for Quebec. For exactly that reason, language laws are incredibly strict. They're the distinct culture of Quebec, but they have an entire different legal system as well from the rest of the country. That means you're writing contracts, not only in different languages, but within different legal systems. And kind of what that's led to is you have a bunch of big financial services players that are only in Quebec. And then you have a bunch of big ones that operate across the rest of the country.
Tal, and jumping into financial services, fintech, things like lending, payments, banking, insurance. What are some of those innovative trends you're seeing within financial services, specifically within Canada coming up?
Like most developed economies, I think Canada mirrors a lot of the same technology innovation across the sectors that you just laid out. You're starting to also see totally online originators and servicers, which is innovation that's kind of existed in other markets, but it's kind of come to Canada at a slightly slower pace.
Love that. Give a shout out to 2 or 3 up and coming fintech companies. You just love what they're doing.
When you think of Canadian Fintech, there are a few like big names that come to mind. Everyone automatically thinks Shopify. Maybe some people know Wave, which was acquired by H&R Block, Verifone, which was acquired by the NASDAQ. But there actually are a lot of really cool, under the radar, emerging Canadian fintechs that are likely going to become that, next Shopify. My favorite, there's a company called Arbor, which operates in Calgary. They're a carbon accounting platform. Another super cool one, Yield Exchange. They're essentially a institutional GIC marketplace. So Yield Exchange is basically trying to take that whole process and put it online. And they're based in Vancouver on the West Coast, Canada.
So insights that you've given around the overarching fintech ecosystem in Canada have been really, really helpful. I'd really like for us to transition more over into the dynamics around growth and how that sector is positioned to continue to growth. And not only that, but what's really taking off right now?
The area that I pay most attention to within Canadian Fintech is around business banking. So it's like B2B financial services. And there are a few codified big players in the US, and you're starting to see the Canadian equivalents of those companies emerge. There are companies really similar in profile to Mercury that have emerged locally in Canada. Those would be companies like Loop, companies like Float, that have done incredibly well in Canada around kind of mid-market, really just thrived, especially coming out of COVID within Canada. And so within the business banking sector over the last few years, there's just been a tremendous amount of innovation and growth.
If you look at Canadian Fintech, it was like one or two really big players, and we're seeing that expand. I'm curious your take, especially as we're starting to see growth of fintech within Canada. And how does the sponsor bank or bank as a service model follow that? And what does that look like?
I think the lack of sponsor banks in Canada is one of the biggest handicaps for the Canadian industry. Like you said, in the States, you have hundreds of sponsor banks, small regional banks, credit unions, up to much larger enterprise banks. In Canada, if you're being incredibly generous, there are maybe 4 or 5 sponsor banks. And that's like really stretching the definition of what a sponsor bank is.
Do you count Desjardins in that? Because they're not really a bank. I mean, they're a credit union. So I'm curious.
My definition of sponsor bank, the bank part can be a bit of a misnomer. You know, I would say if you're a credit union, you're providing regulated financial services to a non-regulated third party. That relationship would fall under banking as a service. The reality in Canada, though, or the reason why there's so few sponsor banks is because of the huge amounts of financial services concentration there is in Canada. So you may have heard of the big 5. So in Canada, you have like 5 super big banks that own close to 95% of all financial assets in the country. And then the remaining 5% are a bunch of mid-tier financial services companies and fintechs that are kind of fighting over this graph. So there's very little incentive for those big banks to offer sponsor banking.
The argument that I've heard, and mind you, this is a little removed for me, was that the reason why the big 5 don't do a lot of sponsorships is really around the regulatory and risk perspective. They're very heavy on saying, hey, if we extend out our services into this, we don't agree with how we have to control it, and we can't really control what's going on. So instead of maybe getting in trouble, we're going to err on the side of not doing it at all and just focusing on our core banking functions. And that's the perspective that I've heard from folks from BMO, from CIBC, from TD, 3 of the big 5 that I've had that direct relationship with, that really seem to be open to programs, but not something that is, and I hate to use this buzzword, but disruptive. If it's inclusive but not disruptive, by all means, they're ready to play all day. But if it's something that falls a little bit outside of the norm, that they hold back.
Many, good reasons why a bank wouldn't want to offer sponsorship, and that's totally fine. The best way to kind of understand the dynamic is you have to see where are the incentives. One of the most valuable opportunities within sponsor banking is the ability for small financial institution that maybe has a couple branches in a very remote locale is able to attract a huge amount of deposits by partnering with a fintech that has an amazing online retail experience. That's obviously not the case if you're a big 5 bank and you're sitting on the majority of low-cost deposit across the country. There's no need for you to go and enter into that kind of sponsorship dynamic. Where you are starting to see some level of banking as a service is through dedicated sponsor banks, similar to Cross River in the States. Not much of, or maybe no retail presence at all, but is enabling financial services indirectly to tons of fintech. And so we have two companies in Canada that sort of fill that same role here. People's Group would be probably the most well-known. DC Bank is another one. And the National Bank is also some really cool stuff.
Let's spotlight a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today.
I say the big six because like National Bank is doing cool stuff too. It creates a unique opportunity for those folks that are outside of the big five on how do you disrupt this industry through fintechs or organizations that have captive audiences in the US. What are some of the other challenges in the Canadian market that are slowing down growth or prohibiting innovation or like not allowing things to really thrive the way that they ought to?
The biggest one, and this is not something that's unique to Canada, is the lack of a codified open banking regime. Just like many other markets, we have a market-led version of open banking, which means you have the fintech aggregators like MX and Plaid. In Canada, you have a Flink, which is a local aggregator that is kind of filling the void of having any regime which encourages or forces banks to share transaction data with third parties. So, so open banking has kind of been on the political docket for as long as I've been writing about Canadian Fintech. And there's been very, very little progress made on that file until the end of last year in what's called the Fall Economic Statement, which is a report that the Finance Department of Canada puts out to say, hey, in the next federal budget, look out, we're going to release something on open banking, kind of like a teaser. The federal budget came out a few weeks ago, and in that budget, they said, okay, guys, coming next year. So hopefully this is not going to be an ongoing challenge for the Canadian fintech industry, but it has been a huge drag on innovation up till now.
What's interesting there is for a long time, the US was actually behind, I felt like behind Canada when it came to open banking. And like over the past year, we're seeing in my opinion, a leapfrog of like what's going on with CFPB and 1033 in the US is really good. And like saying, hey, this is happening and here are specifics around how it's going to happen. I've been waiting like you for it in Canada for a while too. So hopefully I didn't know the news on, they came out and say, hey, next year you'll see something. It'll be interesting to see what unfolds.
Totally. And I can promise you, without 1033, we would not be having this conversation right now. We take quite a few cues from regulators in the US. And I think the reason why is because there's a little bit of a delay. But the example I always use is in buy now, pay later. You know, it was a product that exploded in popularity in the US, as well as other markets. Eventually exploded in popularity in Canada. The level of regulatory scrutiny on the product was also delayed. The CFPB taking a really close examination at some of these buy now, pay later companies years before it started happening in Canada. The same thing can be said actually for banking as a service. Tons of consent orders happening now in the US. It's not happening in Canada. Why? Not because it's such a different regulatory regime here, because the market hasn't evolved enough to justify that level of regulatory scrutiny yet.
100%. I know that you just started a fund and doing a lot of investment within fintech and financial services within Canada. Help us understand the state of the market within Canada when it comes to investor confidence.
So very similar between the two markets. I think the biggest piece of news over the last few weeks was in the last federal budget, there was an increase to the capital gains inclusion rate from 50% to 66%. So there's a ton of chatter in Canada right now around, hey, is this going to decrease the amount of investment going in technology companies? And this is actually probably one of the hottest topics of conversation going on right now. That sort of remains to be seen what the actual impact.
So Tal, we've talked about what's going on in the startup community and a handful of different things that are potentially causing some friction, reducing the overall investments, and thus the speed in which these startups are really moving forward. You know, we're seeing it a lot here in the US, where the bigger companies are buying the smaller companies, and then they become the big companies who buy the next smaller companies, and just this ongoing cycle. I mean, you've seen the cartoon, right? With the little fish and the bigger fish and the bigger fish and the bigger fish. It just feels like that's what's going on. Can you, a little bit of insight into the types of mergers and acquisitions that have been making headlines in Canada here recently, and any that are particularly noteworthy that we should be covering?
Yeah. Over the last year, there have been some huge mergers and acquisitions within financial services. Just a few weeks ago, Fairstone, which is a regulated bank in Canada, merged with Home Trust a few weeks. So that's pretty substantial because there isn't really a major federally regulated FI that focuses on subprime lending. So that's going to be a really, really interesting one to watch, because you're basically creating a company that can get access to super low cost consumer deposit and then lend those back out at a much higher rate with like a beautiful return on equity. That's going to be a really cool one to see.
Hey, there's a market opportunity within Canada for subprime, near prime, deep prime lending, right? That the big five aren't focused on. They're focused predominantly on prime. But the one thing we didn't bring up that I would love your perspective on is the recent change that Canada made on rate caps from 47.2% down to 35%, and the impact that will have on Canada and what that looks like, especially within subprime and deep prime. Give us the pulse on the industry and give us your direction of where you think that is heading forward and what that looks like in the future.
What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
Yes, I think this is probably one of the most substantial pieces of policy change in Canada within consumer finance. So the allowable rate of interest in Canada was 47% annualized, and that's being brought down to 35% APR, which means that prime lenders likely will no longer be able to service risky borrowers. This doesn't just impact those lenders, it impacts all lenders. Those businesses are still going to need to get access to credit somehow. And if they're not doing it through regulated channels, they will still find ways of accessing credit in other ways that maybe are unregulated. And that will ultimately create a drag on the Canadian economy. Canadians into financially handicapped positions is also terrible for the Canadian economy. They're no longer able to contribute at the same rate of productivity that they would if they were in a stronger financial position. So it is a pretty substantial change within Canada, and there are quite a few Canadian lenders that have been very vocal on the issue.
With seeing the reduction of the allowable interest rate, does that take certain demographics completely out of the market? And how do you see, or do the fintechs you work with see that impacting socioeconomics of those peoples that are impacted?
Access to credit is how a functioning economy operates and grows. The way that the Canadian financial system is structured, Canadians are fairly well banked, but not all of those Canadians that are fairly well banked are going to be able to go and get a line of credit or a personal loan from the company that they bank with. Many of them will go to alternative lenders to get access to that credit. If there is an artificial cap on the allowable rate of interest, that likely means that there will be certain people that will not be able to now access, whether that is to cover unforeseen expenses or maybe to cover business expenses. That is going to create a kind of ripple down effect within the economy.
Out of curiosity, Tal, do you see more of that coming in the Canadian market and more M&A of folks coming together and merging together? Or what does that look like on the forefront in the short and long term?
There are a few reasons why M&A has become such a popular way to find liquidity. I mean, the big one is there aren't a lot of companies IPOing right now. We will continue to see these types of mergers. Also, a really fascinating transaction. The two largest home improvement lenders in Canada recently merged. A company called Finance It acquired a company called Simply Group. And there was a period of time where the market wasn't too sure which one of those two companies was going to acquire the other. But at the last minute, it was Finance It acquiring Simply Group. And what that created is essentially a monopoly within the home improvement financing sector. They own close to 97% of the market now, thanks to that transaction.
Hey, for 7 years, I've actually spoken with Canadian institutions. One of the first questions they always ask is, who else in Canada you work with? And if the answer is no one, they're like, I don't know if you really know Canada. You're a US company. If say I was a fintech founder and I have a US business and I was looking to expand into Canada, help me understand insights on what's truly different between the US and Canadian markets and advice that you would give on how to approach expansion into Canada based on being in the US or another market.
The first thing you need to decide is what market within Canada you're going after. French Canada versus English Canada, that's a huge one. You probably have to pick a lane. Then depending on the type of financial product that you're offering, basically prime finance is dominated by the big five. Where I see quite a lot of opportunity is in the areas where some of those larger financial institutions might not be incredibly active because they don't want to be associated with that industry. They often will indirectly through loan syndication and things like that. So either looking at underserved markets or potentially underutilized technology. So, the banks are not incredibly strong at serving those customers digitally. So there is a little bit of opportunity in Canada, I would argue, to service potentially the same clientele that the banks are going after, but with a completely digital offering. And there are some really cool lenders who have emerged within Canada just over the last few years, really trying to capitalize on that, similar to what Better.
So I'm going to flip that question on its head, right? We were talking about how to get into Canada. Well, as you mentioned, it's 40 million people. That's less than the state of California, if I remember correctly. So, and I'm not meaning to downplay it, but a lot of times what happens in a lot of the Canadian Fintech that I get to work with are trying to figure out, how do I come into the US? I would love to get your perspective of what they should be thinking about and looking at if they want to head south down here to the United States. Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
Canada is, I would argue, one of the best places to build a technology company. We have amazing universities, tons of skilled immigration, amazing tax incentives to work within Canada. It's a small market though. So if you're building a product that's only going to service Canadians, you're kind of capping the total addressable market that you could ever grow into a valuation of. A really good example of this is a company called Zayzoon, which is based in Calgary. They're an earned wage access company. They originally tried launching the product within Canada, so partnering with Canadian merchants to offer early access to wages. There was no appetite for it in Canada, and that was a total godsend for the company because they said, okay, screw Canada for now. We're just going to go straight into the US. And they have built an amazing business. And there are so many good examples of companies doing the exact same thing.
So I'm going to circle back around real quick on this one. Are there any things that they should be thinking about from your perspective? Like the group called Atlantic Fintech, right? And their whole focus is to bring fintechs from Canada into the US and globally. They have a number of different processes they go through other than partnering up with a governmental organization such as that to help extend it. Are there any other things that you could think of that they might want to look at or reference before taking the leap to go outside of Canada?
I think there are quite a few different things that you have to be considering before you're expanding into another market. I think, is the juice worth the squeeze is probably the biggest one that you should be thinking about. The US is obviously much more competitive, but the much bigger prize, at the end of the race. The Canadian government has quite a few different institutions to try to encourage the export of Canadian companies into other markets. We have EDC, Export Development Canada, which is essentially a bank that helps technology companies expand into other regions. We have tons of trade missions in the UK and the US, Australia. Similar to Atlantic Fintech, we have the P100, which brings some of the most promising Canadian technology companies to SF every year. So there is a ton of help that you can get, but the primary decision of whether you expand into another market or not is this market worth the investment? Because there are going to be tons of challenges expanding into another market, hiring locally, compliant, finding and establishing a partner network. So you got to make sure it's worth the investment up front.
I've seen two approaches folks have taken from expanding from the US market or another market into Canada. One of, hey, people, go do it, right? Like it's similar, go do it and figure it out. The other is like, hey, let me find folks that understand the Canadian market, bring them on and go expand from a go-to-market perspective into Canada. Is there a right or wrong way? Give us your perspective on.
No, I don't think there's a right or a wrong way. I think market timing is really going to be the biggest one. Nova Credit, which is like an alternative credit bureau that allows local FIs to go and get access to credit bureau information in another country. They are all about expanding into new market. They have done a really, really good job of establishing, local ops because their entire business is kind of contingent upon it. When they came in to close a deal with Scotia, one of the largest lenders in Canada, they did that mostly with a US sales team. And I'm sure that they got the question, hey, do you work with any other FIs in Canada? And at that point, the answer would have been no. But there was a huge amount of secular pressure on that Scotia, along with all the other big Canadian lenders at the time that they entered into the market to help underwrite folks that were new to Canada. So it's a bit of a balancing act. If you have internal resources that are local, that can speak the language, of course, that's going to be a huge, huge help. Can you do it without that? Yeah, for sure. If there are other tailwinds that are kind of working for you at the same time.
You opened so many additional questions that we don't have time for today, just with that last statement. I'll just put a pause on that piece. We could talk about that later. But we've come to that part of the episode where we like to either hop into the hot tub time machine, pull the good old crystal ball. I mean, jump into you name it. We like to go into the future, basically, is what I'm trying to say here. Is we want to look out 5, maybe 10 years into the future. What are the big drivers do you see in growth as well as expansion, maybe even markets within banking, lending, fintech that you see in the next 5 to 10 years?
So I think the biggest one is the one that we already discussed. I think banking as a service really has been one of the most significant drivers of fintech innovation globally. There are so many companies that wouldn't exist if not for a partnership with a regulated financial institution. In order for Canadian fintech to really catch up with other developed markets, we absolutely need to have a thriving banking as a service system locally. So I'm looking to my crystal ball. I'm seeing way more sponsor banks that have different risk profiles. So some that are more excited to attract commercial deposits, some more aggressive on retail side, some that are regulated differently, some that have various niches, but you kind of need that diversity of sponsor bank partners in order to unlock the next wave of fintech innovation. It's so crucial.
Well, on that note, if we ended right now, this would be, I think, the only episode where we didn't talk about AI.
As we talk about AI and all these different pieces, and of course, I never can get my fill of AI, especially these days. How are you seeing the Canadian fintechs approach the use of artificial intelligence, machine learning, whatever we want to use for today in their business? Are you seeing a focus more on efficiency? Are you seeing it more on personalization? How are you seeing it being leveraged the most currently in the fintechs you get to work with?
There's a lot of discussion around AI that is just the rebranding of the modeling that these companies were already doing. There are lenders in Canada that are absolutely using AI to make better adjudication decisions, to help with servicing, to help with collection and customer support. These things have kind of already existed. I think what the kind of like this arc of innovation and a huge acceleration has sort of forced banks and fintechs to start actually calling what they're doing AI. And it's also forced regulators to rush out with some sort of an action plan on how they're going to curb some of the more creative marketing language that's being used to describe the sector. So I see it as a huge unlock. Yeah. But I would argue that there has been a lot of innovative work within AI and financial services, or for that matter, financial services within AI over the last few years.
Well, Colton, we've covered, I think, every possible aspect of fintech in Canada, well, heck, globally, honestly, with this conversation.
Tal, and thank you for joining, is the importance of understanding the difference between the two markets. I obviously live in the US and the States, and need constant reminder of what's going on in Canada is unique to Canada and creates unique market dynamics that fintechs, financial institutions need to work together to find ways to address and what it looks like.
Tal, I want to express my gratitude as well. I really appreciate you coming on. It's been fun to get that little reminder, as Colton mentioned, about the differences as well as the similarities between the US and Canada. And I really appreciate you coming and really talking through that with us today.
Thanks, guys. Yeah, it's been a lot of fun.
And that does it for another episode of Accrued by FinTech Confidential, a series presented by LoanPro. If you haven't already, go ahead, subscribe, like, follow, all that fun stuff. And if you want to hear about the episodes as they come out, go over to fintechconfidential.com/access to be notified. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial